it's Dusti Martin with Platinum Living Realty, dropping in and giving you your monthly market update for the city of Phoenix. Buckle up, hit the subscribe button. You are not going to want to miss this. All right, our active listings are up 190% over this time last year, but our sold listings are only down 46% over this time last year, leaving us with a median sale price per square foot that is down 4% over this time last year, currently sitting at about $255.44 a square foot. In the city of Phoenix. Our months of supply is up 438.9% over this time last year, but we're still only sitting at 3 months worth of inventory, well inside seller's market territory. Now, if you own a higher end home, wait till the end. I will break down by price point because all price points in the city of Phoenix are not created equal. Our median days on market, though, is up 153% over this time last year, which sounds like a lot. And then we realize our median days on market is only 66 days. And in an even stable market, we would be at 90 days on market. So keep that in mind. We are returning to normal. We are well overdue for a correction. We haven't really had a significant one to even speak of since 2009. 10, 11. I think the very bottom of our market here in Phoenix was very early in 2011. Keep that in mind. We've had a couple blips here and there where home prices in the higher end kind of halfway adjusted, like maybe a half or 1%, but we haven't really had any sustained overall areas that corrected as the market as a whole, nor that stayed that way year over year. So here we are looking at 4% down year over year, but last year we were having 20, 30, 40. The year before that, we were having 15 to 20. Before that, we were having 11 to 15 and 7 to 9 and so on and so on. So we have had so many years of record-breaking home value increases that having a little smidge of a 4% correction is okay. It's probably the breather a lot of buyers need, and that is good and healthy for our economy. So moving on, let's look at our months of supply by price point. This is super important, especially if you're a buyer, because you know what you're up against, but also if you're a seller, you need to know what your competition is like as well. And that way, when you both get to the negotiation table, you know what you're working with. And if you're a seller that happens to be in a price point where it's a really hot seller's market, then chances are you can be a little heavier handed. But if you're a buyer and you know that the price point or the area that you're looking at is a buyer's market, then you can use that in your favor as well. Don't pay for things that you shouldn't. Just because somebody says it's a buyer's market or a seller's market, don't take it at face value. Always defer back to the data. So with that said, let's get into it. If you haven't subscribed, do that now. Our $0 to $100,000 price range, one would think that this price range would be a crazy hot seller's market. Unfortunately, it's not. It's actually a buyer's market. 8.67 months of supply, well inside buyer's market territory. This is where you are going to see a lot of buyers want a lot of things. You're not going to see full face value offers. You're not going to see even anywhere near list price probably. You're going to see people really trying to wheel and deal. And you're also probably going to have a lot of competition in this price point. Now, there's not a lot of actual homes in that price point, only about 26, but under $100,000 in the city of Phoenix doesn't get you much. And chances are that buyer pool is also very slim, simply because the homes that are in that price point in the city of Phoenix are probably in such rough shape that they can't be financed or financed easily. So with that said, if you've got a home that really truly is a fixer and isn't habitable or can't be financed for some reason, make sure that you are very aggressive with pricing that so that you can at least allow a little bit of room for that investor buyer to come in and see that your house is a good deal and that it can be a good deal for them and make them a little bit of money, because that's likely who you're going to be selling to. Then we go to the $100,000 to $200,000 price range, and we're at 1.63 months of supply. Crazy hot seller's market. You're going to see multiple offers. There is a lot of inventory we do not have in that price point, and so you're going to see a lot of multiple offers, things like that. Then we look at the $200,000 to $300,000 price range, not much different, 1.74 months of supply. So like 7 weeks worth of inventory. This is what it looked like in going into 2020 before things got really crazy. So keep that in mind. Then we look at the $300,000 to $500,000 price range, still in a very strong seller's market, although not an absurd one, at 2.41 months of supply. So strong seller's market, may have 1 or 2, maybe 3 solid offers if the home is priced and marketed appropriately. Then we look at the $500,000 to $700,000 price range, and we're just a smidge over 3 months worth of inventory. And with that said, it's going to be taking you a few months to sell your home, and that you probably will only have 1 solid offer. It probably won't be list price, but it'll probably be clean depending on the condition of the property. Then we're going to look at the $700,000 to $1 million price range. You are at 4.5 months of supply. You are no longer in a seller's market. You're close to it. You're not quite an even stable market either, but you're also not a seller's market. So you really want to price aggressively. You want to make sure that you are getting those 10 showings in 30 days. And if you are not, then you need to be figuring out how to get things moving in your price point. Okay, so then we're going to drop down to our $1 to $3 million price range. We're almost at an even stable market at 5.75 months of supply, 6 months being as even as you can get between buyer and seller, right? So in that price range, you do have a lot of competition. Make no bones about it. And some buyers may even treat it like it's a buyer's market, especially the closer you get to that $3 million mark. So just because you're under 3 million, don't take it totally at face value that it's an even stable market. You're probably not going to get list price offers, and your buyers are probably going to ask for a lot. Try to make sure that if your home is priced and marketed appropriately, if you can do all that, then you will be successful, and you will be successful in a very short amount of time. If not, you're going to be there for 6 months. Okay. Our $3 million and over. Now, this is a bit of an anomaly because it could be 3 million, it could be 25 million, it could be 56 million. So pretty much everything over 3 million gets lumped in together. That is sitting at a 25 months worth of inventory. That's over 2 years. So I want you, if you have a home in this price range, I want you to say this with me. If the price is not compelling, it is not selling. You have to be aggressive if you want your home sold in this market. And by aggressive, I don't mean shoot for the stars aspirational pricing. I mean, go as low as you can. And to be honest, ask your agent, what will it take to get this home sold? What price does it need to be at? And then furthermore, you need to be honest with yourself on whether or not you're even willing to go that low. Because if you're not, it makes no sense to list your home because it's not going to sell. If you have any questions or if you're wondering what your home would sell for in today's market in your area, go ahead and give me a call at 480-717-9405 or visit my website at dustymartinrealtor.com.